Question 34 is a lengthy question which gives us a lot of detail, but then the actual question just asks us to go and calculate the share of total comprehensive income which would be attributable to the non-controlling interest for the year ended 30th of June X9. So if we look back to the information in the question, the group structure here is that AB acquired 80% of the ordinary share capital of CD on the 1st of October 2000 X8. We're then told that the year end is 30th of June X9 and that in that year CD, the subsidiary, has total comprehensive income of $90,000. That's obviously our starting point for taking the share for the NCI, but note the dates here. This is a mid-year acquisition, and so the profit that is realised by the subsidiary for the year will need to be time apportioned. The question then carries on to tell us that there is a fair value adjustment that's been made on the acquisition, and as a result of that, additional depreciation has been charged of $20,000. This would all be post-acquisition and would affect the profit realised by the subsidiary to then split between the group and the NCI. The next paragraph goes on to talk about goodwill and refers to an impairment of goodwill as at 30th of June 2000 X9, and again this would affect the profit of the subsidiary to share between the group and the NCI. The next paragraph talks about goods being sold by AB to CD. This is a sale from the parent to the subsidiary. So while some of these goods do remain in stock and therefore give us a potential PUP adjustment, that PUP adjustment would affect the profit of the parent only. So here where we're trying to split the profit of the subsidiary between the group and the NCI, we wouldn't need to take account of this at all. If this sale had been from subsidiary to parent, we would have included a PUP calculation as part of this working as well. So it finishes off by telling us that the group measures NCI using fair value, which doesn't have any effect in relation to profit, but finally tells us that profit is assumed to accrue evenly through the year, really so that we can deal with that mid-year acquisition. So as far as the 90,000 profit is concerned, the first thing we need to do is work out how much of that arose since the date of acquisition on 1st of October X8. Between 1st of October and 30th of June, that's a 9-month period. So that would give us a profit for that 9 months of 67,500. We then need to reduce that profit for the additional depreciation as a result of the fair value adjustment of 20,000 and also for the goodwill impairment, so that our adjustments would suggest that the subsidiary actually made a profit since the date of acquisition of 17,500, and it's this that needs to be split between the group share and the NCI share, and in this case all we're interested in is the NCI portion. So if the group purchased 80%, the NCI must be the other 20%, and in this case that would give us 3,500 as the share to be reflected in the consolidated statement of profit or loss as being attributable to the NCI.